Have you ever seen a shop that looks busy every day? Customers walking in, sales happening, products are moving, the lights are always on, and the shop is always packed. But then, a couple of months later, you're walking by the road, and the same shop is suddenly closed. What has happened? See, most people think that when a shop is quite busy, that it must be doing really good, right? Business must be really, really good. But that's not always the case. And in fact, very often, businesses fail even when they are making a good amount of sales. In today's video, we are going to understand something that is very important that everyone should know about. That is the difference between what sales is, what profitability is, and what it means to actually have cash running in the business. Because in business, what looks successful on the outside may not always be what is actually healthy on the inside. And once you understand this in depth, topics like sales, profitability, cash flows, trade payables, trade receivables, working capital, all of them become much more easier to understand and know about than simply memorizing them. If this is something that you are interested in, we will be covering that in today's video. Ready? Hello once again, my name is Shiran Fernando and you are joining once more with Terranova Academy. And in today's lesson, we will be talking about what profitability is, what sales is, and what cash flow means. Alright, to get into today's video, let me give you a scenario. Imagine a small stationery shop nearby a school, right? Every day students go to this shop and they buy pens, pencils, books, notepads, and calculators, everything that you could imagine that anyone would buy from a stationery shop. From the outside, it's near a school. It must be definitely getting a lot of students from that school coming in every single day to buy their products, right? And it definitely must be selling a lot of these goods. And if you are putting up a stationery shop, I mean, a school is as good as it gets, right? In terms of a location. So everything's going well. So sales are happening, people are coming, your products are moving. So everything's going well, right? Sales are happening. But let me give you this scenario. You buy your goods from other suppliers. Now, you have to make payments to your suppliers also. When you are buying your goods from your suppliers, you probably between you and your supplier, you would have agreed a payment period. Let's say it could be 60 days, it could be even 30 days. Within that time period, you have to repay your supplier. At that point, you need to have cash in hand to be able to pay to your suppliers. But let's also say now, in terms of all the sales that you've been doing, let's say some of these sales are not happening on cash basis. Let's say some of these people who are coming, they say, I'll pay you next week. And so you give them the product, but they're going to pay you later. They're going to pay you, let's say, in a week or two. So they're buying these goods. So that means they're buying these goods on a credit basis and not on a cash basis. So they're essentially not paying cash immediately for the purchase, and they're deferring the payment. They're saying, I will pay you later, and you are agreeing to it. And that is a credit transaction. What happens when you sell something on credit? You are making the sale. So yes, your sales income is increasing. But are you really receiving the cash? No, you're not receiving the cash at the moment. Yes, you made a sale, but you sold the product on a credit basis. You did not sell it on a cash basis. Had you sold it on cash basis, yes, your sales is equal to your cash. Why? Because you sold it on cash basis. You sold it now and you got the cash. But let's say you sold it on credit basis, you're selling it now, you're not getting the cash now, you will be getting the cash sometime later. So essentially what is happening is your sales at that moment is not equal to your cash. So, because sales means you sold something. Because sales, what does sales mean? Sales means you sold something. Profit means you sold it for more than it cost you. Cash flow means cash is coming in and going out at the right time. So these are three completely different things. Most people think if I sold something, that means I received cash. Not really. Yes, you will receive cash, but you're not receiving cash at the moment. You will receive cash, let's say, within the next 2 weeks. But what if you have to pay a supplier within those 2 weeks? How are you going to pay that supplier when you don't have cash, when you haven't received the cash for it? Let's try to understand this with an example, right? If I sell goods for 100,000 rupees and I sell this on a credit basis, yes, I have sold goods, so therefore I should be reporting sales. Very good. But I have sold it on credit basis, so I'm not receiving that 100,000 yet. I will receive that 100,000 in the future, but not yet. But what if I have to pay the supplier? Let's say I have agreed with my customer to pay me that 100,000 within the course of next month. But what if I have to pay the supplier within that month? where do I get the money? Where do I find the cash? Or let alone, even worse, how do I buy new stock? I have sold goods, so now if I don't have inventory for me to sell again, where do I find money from? Working capital is the money a business uses for its day-to-day activities. It's like oxygen for a business. Working capital is absolutely essential for a business and its day-to-day survival. If you don't manage your working capital on time, and if you don't agree with your suppliers and your customers the right payment periods, what's going to happen is essentially you'll be giving your customers an extended time period within which they can pay you, but you have to pay your suppliers in shorter time periods. If your customers are going to pay you money within 60 days, but you have to pay your suppliers every 30 days, what's going to happen is you will run out of cash. And what's worse, for you to be in business, every time you sell goods, you need to replace that inventory. But where are you going to find money from to replace that inventory? That is the problem. When you see exam questions about cash flow, profitability, sales, it's not just an accounting problem, it's real life matters. These concepts test the day-to-day health of a business and the business's ability to survive each day. So when somebody asks you what is sales, what is profitability, what is cash flow, all of them are equally important. But cash is absolutely important, and having profit does not mean that you are healthy, because you need to have cash in the business for you to be able to continue to survive. So the next time you see a business with a lot of customers, don't immediately think that it is successful. A good business is not only about selling more. It's about making sure you are paying your suppliers on time, that you're collecting money from your customers on time, that you're managing your stock effectively and timely, and that you keep enough cash within the business to continue to operate, to continue to be able to place orders, to be able to pay your utility bills, so on and so forth, and including your staff salaries. If this lesson helped you understand what the difference is between sales, profit, and cash flow, do like and share it with somebody who you think might also benefit from it, and that would greatly help us out too in enabling our videos reach out to more people like you. In that case, until we see you again with another video, keep learning.